This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to start the week in positive territory as US jobs data eases recession fears. US-China trade talks are set to resume on Monday with rare earth materials in focus. President Trump says he may send Marines to join the National Guard troops in Los Angeles over the objections of the state governor and city mayor. And Bloomberg reveals that Meta's in talks for an investment in AI startup Scale that could top $10 billion.
Take a look at how we're setting up here in the Asian session because we are watching the Japanese yen that weakened the most in about a week against the U.S. dollar. But we are seeing a little bit of strength at the moment, but still around that 145 level. Still Nomura calling a 136 level by the end of September against the U.S. dollar. Here in Japan, within the hour, we'll get the first quarter GDP numbers. The revised numbers expected to show a smaller contraction than expected. Australia away on holidays, but take a look at the offshore yuan right now at that 718 level. Of course, we are expecting May trade data from the country and inflation data as well. Deflationary pressure still expected to be felt across the board. But Haidi, you mentioned the semiconductor story, the Meta AI story. That's one sector that we'll be watching in the Asian session today. Take a look at how U.S. futures are trading at the moment because, of course, we had that incredible rally when it comes to big tech giants. In fact, the S&P 500 surpassing that 6,000 level. And Bloomberg now learning that Meta is about to make a multi-billion-dollar investment into artificial intelligence by AI startup Scale AI. That could be the largest external investment by Meta so far, but it's really that tech picture. Nasdaq 1 futures at the moment under a little bit of pressure, but of course we had incredible momentum in the U.S. stock market. We had seen that solid jobs report last week. This week we're expecting those inflation numbers out of the U.S. on Wednesday as well, not to mention PPI data as well. But Heidi, really it's about the political pressure right now within the United States that we're watching.
The temperature is certainly rising when it comes to California, right? President Trump saying that he may deploy U.S. Marines to Los Angeles if needed after sending in National Guard troops following days of protests over sweeping immigration raids.
We're going to have troops everywhere. We're not going to let this happen to our country. We're not going to let our country be torn apart like it was under Biden and his auto pen.
What's the bar for sending Marines to...
The bar is what I think it is. I mean, if we see danger to our country and to our citizens, we'll be very, very strong in terms of law and order. It's about law and order.
As being Bloomberg's national immigration reporter, Alicia joins us now from Los Angeles. And Alicia, we've seen potentially even a further escalation of this. We've also heard from the likes of Gavin Newsom and, the state's leaders see this as being not just unnecessary, but also further inflaming the situation.
Exactly. It's an unprecedented move to send National Guard troops into a state under federal authority. It hasn't happened since the Johnson administration in the 1960s. And even then, it's a much different scenario. So the last time troops were deployed here without or under the federal guise was in the 1990s at the request of the city and state. We're dealing with an unprecedented sort of approach here.
Unprecedented because also we have seen the number of arrests in recent weeks just surging. Tell us a little bit about the state of immigration policies across the U.S. right now.
It is. The new ICE mandate is 3,000 minimum arrests on a daily basis. They had been, in the several hundred range, then cranked it up to about 1,600 and reached now 2,000 on average in the last few days. So what we're seeing is a rapid escalation. They're still behind on the 3,000 goal, but that goal is there, and you're make arrests in every possible corner. It's no longer the sort of concentrated go out with a list and look for certain individuals, particularly criminals and those with significant threats to the public safety. We're now seeing a much larger net at Home Depots, parking lots where people gather for day labor, or a restaurant last week in San Diego, the garment district here in Los Angeles on Friday. And we're seeing expansions of that almost on a daily basis around the country. You'll start to hear more and more about these raids. And what we're seeing over the last several weeks is increasingly a militarized approach to this. Guys in camouflage, guys in helmets, long guns, these heavy-duty tactical armored vehicles rolling into neighborhoods or being deployed for instances of one individual in some cases. In other cases, it's a much more broad, as we saw in Los Angeles on Friday. but it's rapidly expanding with the goal of a minimum of 3,000 people a day, hoping for a goal, broadly of 1 million people in a year. That's still, again, they're off the mark, but they're making advances that way.
Critics are really concerned about what this could lead to, right? There are worries about martial law, of course, in the context of the Trump administration's fairly unorthodox approach to government. Is there a sense that this is sort of redirecting, I guess, criticism over the immigration policy and actions to, what is being, I guess, painted as being, an out-of-control situation on the ground in LA?
Certainly, if you talk to LA authorities and California state authorities, there are concerns, but it is not an out-of-control situation as described by the president and members of the administration. What you're seeing is two different versions of events. Lots of public response to these ICE arrests. And initially, at least, these things were confined. They were, in some cases, a couple of hundred people who happened to be in the vicinity, and they sort of sprang up organically. What we're seeing today is a little bit more organized in terms of larger scale protests, but we're starting to see those expand, and members of the community are simply responding more and more as they see ICE vehicles, as they see Border Patrol vehicles. Social media is sort of running away with reports of Border Patrol, ICE, and other DHS components showing up in neighborhoods and parking lots, and you're seeing a lot of I Spy sort of things, and then a public response when there's an incident.
Where's the circuit breaker here? At what point could President Trump back down, or are we going to continue to see these very harsh immigration policies?
He says we'll continue to see this. His administration, DHS authorities, his advisor Tom Homin has said, we're not going to stop. This is what we're doing. We're carrying out the mandate that they feel they have. So I don't know what the circuit breaker is. I don't know that they necessarily know either, or that they have one in mind other than reach 1 million arrests, mass deportation. There's estimates of 12 or so million people in the country without authorization. Is that the threshold? It's a little bit unclear, but the goal is clear. Arrest as many people as possible, deport as many people as possible. They've, expanded to deportations to third-party countries. We've seen, Venezuelans being sent to El Salvador, people not from Mexico being sent to Mexico. There are 8 men right now in Djibouti who were being sent for deportation to South Sudan, and that was blocked by a federal court. So right now you're seeing a lot of things rolling very, very quickly and sort of compounding on top of themselves.
Bloomberg's national immigration reporter Alicia Caldwell there with the latest on those protests and, of course, ongoing immigration policies across the U.S. When it comes to trade, top negotiators from the U.S. as well as China are set to talk in London later Monday, aimed at diffusing tensions over Beijing's rare earth export restrictions. The Trump administration wants to restore the flow of critical minerals crucial for everything from cell phones and EVs to military systems.
Those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva. And President Trump, being a deal maker, talked with President Xi, and he said, let's take, our senior guys, the people who are the same level as you, let's have them meet somewhere, and let's get these things cleared up, and then we'll clear up what you don't like that we've agreed to release on our side.
For more, Bloomberg editor Tony Chushka now joins us from Washington. Tony, can we expect anything concrete? Should we be hopeful about the negotiations in London?
Oh, I think there's a lot of pressure on both sides to come up with something. I mean, you saw it play out about a month ago in May in Geneva, which is what Kevin Hassett, the White House economic advisor, was referring to. And in the end, they came up with a very carefully and even maybe bureaucratically worded a statement that tried to sort of right the ship and move forward from this very bad friction that's also caused a lot of tension in markets and for businesses as well. So yeah, I would. They've promised, I believe, at least the U.S. side has promised some kind of a statement, if you like, after the talks in London, and I would assume to hear the same from the Chinese side.
Tony, how more complicated does this become if it moves on from the issue of pure tariffs to the issue of export controls, potentially more complex for both sides in terms of what they're willing to give up?
Well, you just said it. It's only going to get more complex, and there's also a deadline that's looming. We know that there's been this notion, the taco notion of Trump always sort of caving at the last minute, but there is this deadline coming up for a snapback of U.S. tariffs, or of the elevated U.S. tariffs on Chinese goods imports in August. So yes, I mean, they're trying to set themselves deadlines, or the U.S. is trying to set deadlines. But of course, that always comes with risks as well, especially as you might dive into a broader range of trade issues, which is the declared goal, however.
President Trump seems to be pressured from all sides. I mean, we just saw the ongoing protests in California. Now we're talking about geopolitics against China. But how's the feud with Elon Musk going so far?
Well, it didn't go very well last week when it exploded, as we all saw. But the word as of already Friday afternoon, I think, from the White House heading into last weekend, was that, well, we're moving on. There's no need for Trump saying there's no need for me to have any further discussions about this with Elon Musk. So Trump and his administration are clearly trying to convey this notion that, well, you may be the richest man in the world, but here you're messing with politics and you're playing with fire and you just got burned. That said, of course, at the same time, we know that Musk, holds some cards, including with NASA and the Pentagon, which he alluded to at one point. SpaceX flies the Dragon, which links the International Space Station to Earth. So there is that. What's happening now is that I think they're trying to sort of. It seems like it's a bit of a cooling off period right now. Vice President J.D. Vance was on over the weekend on a podcast saying, well, we do hope that Elon Musk, quote unquote, returns to the fold. What that actually might mean and how that plays out is something is a space to watch, clearly, since in a way they do need each other.
Yes. We know that a huge part of that whole bickering started with President Trump's allegedly beautiful bill, right? So where are we in that tax legislation?
That's going to move ahead again this week in the Senate. The Senate is going to be taking up detailed and also the most contentious elements of that bill, which, as you know, came from the House of Representatives, and there are divisions among Republicans, maybe not so much in the Senate, but in the House. And if the Senate makes changes to the bill, which they have said or strongly indicated they would, then that has to go back to the House, where you can then have a rerun of all of the various divisions. It's partly, or a lot of it is between fiscal hawks and then the ones who don't care so much about that, who care more about cuts, that's going to start playing out this week. You were playing Kevin Hassett at the top. He said, look, if there are differences here in Congress, then Republican lawmakers, you guys need to sort that out. The president has made it clear what he wants, which is to have the bill done by July 4th, Independence Day, and that's where we stand heading into this week.
Bloomberg Tony Shoki, there are a lot going on still. And coming up on the Asia trade, Mizuho Securities will be with us to talk about these concerns when it comes to the bond markets, and particularly supply and demand and that balance in JGBs. Plus, Lombard Odier tells us why they're overweight in global stocks and investment grade credit. Much more ahead. This is Bloomberg. Time now for a look at the week ahead. In inflation numbers out of the US will be the key data point that we're focusing on. CPI saying ticking higher. Companies gradually passing along those tariff costs. The Fed, of course, will be watching closely ahead of their June 17th policy meeting. We are also getting monthly price data out of China today. Bloomberg Economics expects that consumer prices rose slightly in May after a 3-month decline, but no assurance is seen when it comes to deflationary pressures lifting. Later on this hour, Japan's revised first quarter GDP could show a smaller contraction thanks to stronger private capital expenditure. Let's bring in Alicia Garcia, Herrero, Chief APAC Economist at Natixis. Alicia, always great to have you with us, particularly to kind of sort through everything that's going on. And of course, the big sort of risk factor or impossible opportunity for some relief is how these latest round of US-China talks go. And as you mentioned, as we've been kind of talking about, this potentially becomes more complex if we're moving on from just straight tariffs to the issue of export controls, which is sensitive for both sides. Are you optimistic that an agreement, a meaningful agreement, could be reached?
I'm optimistic that an agreement will be reached, but it won't be meaningful. That's even the previous one wasn't very meaningful. I mean, of course, tariffs were cut, but everybody knew that they had to be cut. They were too high. They were at blockade level. That was easy. This time around, I think we'll only have a temporary relief in export controls. We have export control from both sides. So the U.S. went from, what we already had, providing export controls on GPUs, any semis that of advanced enough to be harmful for China. But we moved even further because of retaliation from China's own export controls on critical raw materials. We have airplane engines, we have components of nuclear plants, you name it. So because we've actually expanded, there is a room to temporarily lift these export controls, both sides. But that won't be a full deal. So more time is needed. There's too many things happening, like from student visas, you name it. So all of that will just be temporary. That's a second truce out of the very many we will see until hopefully things get settled.
In the meantime, do sort of the economic fundamentals to the downside continue to become entrenched? In China, you obviously still have a broadly deflationary environment. Domestic demand is still pretty subdued. Exports obviously getting a temporary benefit. On the US side, do you expect costs to continue rising going into the end of the year?
Yeah, I mean, at Natixis, we have, of course, slightly higher inflation, but not to the point of really unraveling stop in cuts from the Fed. So we think the Fed is going to cut 3 times this year. And the reason is that although employment data was decent, but we already see the cracks. The companies are not laying off, but they are thinking about it. You can see from the data that there's less confidence in the economy, rightly so. Yeah, we have so bad news overall, from tariffs to many other things happening. And in the US. So I think, just to make a long story short, those inflationary pressures will be creeping up. And in China, I don't think the deflationary pressures will be fully off the table with the data we're waiting. Maybe slightly better, but that will be it. So that divergence between China and the US in terms of price movements is there to stay.
In the U.S., how much do you think a tax bill from President Trump could help the broader economy? And how forgiving do you expect bond investors to be? Because just all over the world right now, we're seeing borrowing costs surging on really concerns about those government budget deficits.
I wouldn't bet for investors to be forgiven because they have not been forgiven for a while already. So I think this bill, this BBB, big for sure. I'm not sure it's beautiful. We could find another adjective for that one. That bill is a problem for the U.S. and I hope, that there is enough attention for that. Investors won't take it easily. And you're right, it's not only the U.S. So anybody who is a little bit off the mark, and we saw the JGBs for that matter, will suffer from very high cost of funding. I think that's where we are. And this bill will be a problem for sure. I don't think that's going to support growth because there will be a lot of investment leaving and that will increase the cost of funding for the U.S. So I'm not sure that's going to help.
Yeah, we have seen weak demand for JGB auctions here in Japan. We're expecting first quarter revised data for GDP here in the country. What are you expecting?
Well, yeah, it might be a little bit better, but let's be clear that the first quarter was very negative. So we do have a better year for Japan, 2.3%, which is quite high. But because, again, last year was weak. Now, if we revise now, we'll have to revise down for 2025. In other words, growth isn't really there in Japan. We have to realize that. We even heard that there might be a new emergency package, I think 900 billion yen, additional fiscal package. All of this is going to be additional supply of JGBs, going back to the cost of funding for Japan creeping up as well. And the reason why they need all of this, first quarter, exports were so underwhelming. And therefore, what to expect from the Japanese economy other than, again, additional stimulus on the fiscal side. But that's not going to solve the problem. We need more productivity. We need more investment. The Japanese government is very keen to receive additional FDI. That's true. But it isn't really yet happening in big scale. Yeah.
Yeah, and of course, we'll be watching the trade negotiations at the G7 between Prime Minister Ishiba and President Trump as well. Alicia, Garcia, Herrero, always good to have you with us, Chief APAC Economist at Natixis, with a look ahead on all of the economic news expected this week. This is Bloomberg.
Some of the other stories that we're following this hour. Israel's defense minister says he will not allow a humanitarian aid ship to reach Gaza, with activists including Greta Thunberg on board. The Freedom Flotilla Coalition tweeted a few hours ago that the vessel was around 160 nautical miles from the territory. The group previously attempted to reach Gaza last month when it said the ship was disabled by a drone strike. Ukraine has rejected Moscow's claim that Russian ground troops have entered the central region of Dnipro for the first time. It is one of Ukraine's most populated and industrialized areas. Russia's ground war has picked up speed again, with units nearing a regional capital in Ukraine's northeast. Prospects for a US-brokered ceasefire remain elusive, although a prisoner swap appears to be on track to happen this week. Colombian presidential candidate Miguel Uribe Turbay is still in critical condition following Saturday's attempt at an assassination. He was shot twice in the head and once in the leg while campaigning in a Bogota neighborhood. Authorities have arrested a 15-year-old. President Gustavo Petro says investigators are trying to establish the motives of the alleged attacker. More ahead here on the Asia Trade. This is Bloomberg. Take a look at how Asia futures are setting up. Of course, it is a bit of a holiday-themed session. Australia is away for the King's holiday. We are looking at some moderate gains on Monday. US and China set to resume those trade negotiations. That's sort of front and centre in terms of whether investors will continue to price around further trade deals and this sort of continuation of the trade truce. We also had jobs data that was seen as pretty positive for the US as well. That sort of eased some of those recession fears, with moderate gains in the labour market. Unemployment rate holding at 4.2% there as well. We're also looking at some moves when it comes to the Ministry of Finance on how they're tweaking debt issuance and whether that might give a little bit more of a push to two-year yields and price the next rate hike for the BOJ as well. Let's bring our MLive strategist, Mike Cranfield, for more. And of course, it continues to be the bond market and the longer end of the bond market that we're watching. What are the expectations setting up when it comes to this Treasury 30-year auction?
It can be a tough one for the US, particularly as they also have a 10-year auction this week, and long end bonds are not very popular around the world at the moment. It's not just in the United States, but we've seen friction in Japan, of course, as well. That's partly why Japan's Ministry of Finance is considering doing less at the long end of the curve and shifting to the shorter end. So it's going to be pretty tough. It's going to be even harder for the US because those 30-year yields have actually been coming down for the past couple of weeks. We saw the yield reach about 5.15 in the middle of May, and it's come down about 20 basis points or so since then. So over the next couple of days, traders are probably going to be pricing in for a potentially weak auction, and that means that we're likely to see yields move back towards those levels that we saw last month before the auction actually comes. So pretty difficult couple of days ahead from that point of view. And also, if you look at what's happening from an international point of view, some of the things going on in the United States, clearly investors are concerned that there's a certain amount of self-harm being done here through US policy, which is affecting US assets. It's not just whether it's not just the US dollar, but it's also spreading over to the bond market as well. So people are questioning whether or not the United States deserves to have this haven appeal that it had, particularly last year. People seem to want to put everything into the United States. That is certainly diminishing. Yeah. And it's particularly being affected in the fixed income and the US dollar market.
Yeah, exactly. So we actually saw the dollar being under a lot of pressure recently. But also on the other side of that, we are seeing EM bond sales surging. There seems to be much more optimism over emerging markets.
I think to some extent that's a currency-driven thing. People are feeling happier about the diversification away from the US dollar. People are looking for other homes around the world, not only in the G10 space, but also in the emerging market space. And of course, a big part of that is what happens with China. The Chinese yuan is probably the key currency for the emerging market world. We've certainly seen it get a little bit stronger, and there's quite a bit of optimism that as China does more to stimulate itself at home, as it gets closer to a trade deal with the United States, all of those things are supportive for the Chinese currency, which is already gained in the past couple of months and probably has got further to go as well. You can see from the way the daily fixings are going from the central bank that they're slightly encouraging the yuan to get a little bit stronger all the time. And that the spin-offs from that are much greater in other currencies, whether it's in Asia, whether it's in the rest of the world, Latin America, parts of Eastern Europe. They're all benefiting from the fact that China is more stable, the yuan is gaining strength. So it's all feeding through to a positive narrative for EM. And also there's probably a wish to get those deals out of the way as soon as possible in case long-term yields rise further in America. Because if they do, it will certainly affect pricing for the emerging market world as well. So you see corporate bonds as well in the United States. People are trying to flood the market as quickly as possible in case yields rise further in the second half of the year. But yes, it's partly currency driven. As long as the yuan stays on a good path, it will help the emerging market bond world.
How much of that path is going to be driven by what we get out of this latest round of US-China trade talks, right? Do you think that's meaningful in terms of how investors kind of continue to price around whether more trade deals, I guess not just with China, but everything, all the countries that are currently at the negotiating table could come away with?
The fact that the US and China are talking again is certainly very good for sentiment in general. I think investors generally are not expecting huge immediate progress on that front, but the fact that they are making gradual steps, that the talks are ongoing, there's positive signals coming out, potential of an actual meeting face-to-face between President Xi and President Trump, that's also a good thing as well. Everybody, I think, knows that getting actual deals done is a very long process. There's a lot of details, a lot of work needs to be done, but the fact that they're gradually moving that way rather than the situation that we had earlier in the year when they weren't even talking to each other, it sounded as though they were both digging in for a very long term, the risk of tariffs going up to 50, 100%, that kind of category, that seems to have backtracked a long way. As long as we don't go backwards and we start getting threats of very high tariffs again, and investors will feel much more comfortable about it. Plus, on the other side as well, they can see that the Chinese economy is holding up reasonably well domestically. China is still doing a lot of work to improve things there. They're getting good hits on the AI side. You can see that the Chinese companies are beginning to isolate themselves from what's happening in the tech world in the US as well. So the overall picture is improving. And as long as we don't get setbacks, that's mostly what investors are looking for.
Bloomberg MLive strategist Mark Cranfield there. Take a look at some of the other stories that we're tracking today. And China says negotiations with the European Union on setting minimum prices for Chinese EVs have entered final stages. The two sides are hammering out an agreement after the bloc imposed steep tariffs on Chinese EV imports last year, alleging that state subsidies give the country's vehicles an unfair advantage. China's Commerce Ministry says both parties have instructed their working groups to step up efforts to resolve trade differences. Bloomberg's been told that TikTok owner ByteDance is replacing US hired staff in Seattle with managers connected to China after sales on its e-commerce platform fell short in America. Sources say TikTok Shop had to scrap a goal of increasing its US business tenfold last year to $17.5 billion. We're told more than 100 employees have left or been fired amid confusion over leadership, Shery.
Haidi, now let's turn to Meta because it's set to be in talks to make a multi-billion-dollar investment into artificial intelligence startup Scale AI. Sources say the financing could exceed $10 billion in value. Let's bring in Bloomberg AI reporter Rachel Metz. And Rachel, this could be the biggest external funding investment for Meta when it comes to AI.
Yeah, this would be a huge investment for any company, but for Meta in particular when it comes to AI. Meta and Scale have done work together, but this would put them even more closely together.
How does the rise of Scale compare to, say, the likes of OpenAI, and what sort of benefits would Meta be getting in terms of this sort of investment at this scale?
So the Scale and OpenAI have a lot of similarities. They've both been around for about a decade. They both have leaders that are really good at networking and have spoken in front of Congress. Alexander Wang, who is the head of Scale, has in particular been outspoken about issues he feels the U.S. has with China when it comes to AI, and he's concerned about keeping AI really strong and keeping it moving in the U.S. So that China does not get as good at AI. If these two companies were able to work more closely together, it could be really beneficial to Meta because they have their Llama AI systems. They've been working a lot on making them better and better. Scale's expertise is in helping companies build these systems and also to build customized systems. So they do a lot of data labeling, helping companies improve systems with a process called reinforcement learning as well. So this focus on these aspects could really help Meta increase the capabilities of its Llama AI systems.
So what are Mark Zuckerberg's priorities right now? And could we see more investments into AI funding sort of technologies, or is this basically the biggest one that we can expect so far?
Well, right now, assuming this deal comes together and it comes together at the size that our reporting has indicated it could be, it would be huge for Meta, and you would expect that they would expect to have some deeper relationship and partnership with Scale coming out of that. Meta, and Mark Zuckerberg in particular, is really focused right now on improving the company's AI capabilities. To be fair, Meta and before that, when it was known simply as Facebook, the company has a long history of innovating with AI, doing serious AI research, and advancing the field for many years. But as companies have become more and more enamored of generative AI, it seems that Meta has been taking it more seriously and trying to also become a serious contender in that space and have lots of companies use Llama. So with something like Scale, with a closer tie-up to a company like Scale, they could probably feel that they're really able to advance that even farther quicker.
Right. Bloomberg AI reporter Rachel Metz there with our Bloomberg scoop on Meta. We have more ahead. This is Bloomberg. Japanese markets will open at the top of the next hour. Take a look at how assets are setting up because we saw the Japanese yen weaken against the U.S. dollar last week to the lowest in over a week. We're seeing a little bit of a rebound in the Asian session right now, but still we're talking about very close levels to 145. Nomura is still seeing 136 by the end of September, recommending shorting the dollar versus the yen. We're watching, of course, the JGB space very closely. We do have Japan's revised first quarter GDP numbers likely to show a smaller contraction, but we saw JGBs rising last week despite a weak 30-year bond yield, actually the weakest demand ratio since 2023. But there are now expectations that the Japanese government could be adjusting debt issuance as soon as next month. So let's discuss what we're expecting when it comes to the broader markets and bring in Shoki Omori, Chief Japan Desk Strategist at Mizuho Securities. Great to have you back in the studio. So should we be pricing in a finance ministry move at this point?
I think it's already priced in, but we still don't have the amount yet, and we still have to wait for the primary dealer conference that's going to be conducted on 20th. So I think for investors, it's still wait-and-see mode until we see the results of the primary dealer conference.
Is the Japanese yields, government yields, sort of move that we're seeing here, sort of reflecting what's happening globally? Because we have seen pretty weak auctions just globally in general, or is it more specific to Japan?
I think it started off in March when the German government started expanding the fiscal. And then, of course, Treasury yields going up in April. And then we had a weak auction in May. So there's a series of events that took place that pushed up the long end yield. And in addition to that, we didn't see much of a buying in the long end from the real money in Japan. So that has been a concern for the markets.
So what is the next catalyst at this point?
We just have to see how much the Ministry of Finance is going to reduce the long end.
What about the Bank of Japan? Because we know that they're coming out with a review, right?
Yes. I think the expectation is that the BOJ will continue cutting back on its QE program, QT or QT, but the amount is going to be smaller going ahead starting next April, and that's already priced in.
So how concerned should we be about the debt servicing costs in this country?
I don't think it's a big issue yet because despite the fact that the long end has been underperforming, I think we are seeing foreign investors buying the long end, which is a new thing, I think, because it used to be the Japanese investors buying the long end, but now we're seeing foreign investors buying the long end. So if that continues, still in a limbo situation, but if that continues, it's going to be a support for the bonds in Japan.
The kind of supply-demand being looser in the long end or the super long end of JGBs has sparked some concerns over the fiscal situation, right? Do you think those worries from foreign investors are warranted?
Yes, I think the government is pretty straightforward. They're saying that they're not going to cut consumption taxes and other taxes. So in that sense, cutting back on the supply and without cutting back on, say, consumption tax, that is, I think, easing for investors concerned about the fiscal situation in Japan.
What about supply when it comes to treasuries and the fiscal expansion over there? How much does that impact what then occurs in Japan? There's certainly no kind of urgency, I guess, in that sense.
I think that's already priced in, the big beautiful bill, because I mean when that came out, JGB yields did pick up in the long end, but I think it's already priced in, and given that the longest volatility started to stabilize, I do think I mean if the U.S. comes out for further expansion in the fiscal, I mean, that's not going to be another story. But at this point, I think with the current bill, I think the JGBs will be performing decently.
Shoki, Omori, really good to have you here in the Tokyo studio, Chief Japan Desk Strategist at Mizuho Securities. And of course, you can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. Subscribers can also watch live on the terminal using the TV Go function. This is Bloomberg. We're setting up for the market opens in Korea after a big rally last week of gains of more than 4% only in 3 trading sessions. Given, of course, it was a presidential election week, we had a couple of holidays and we actually saw the biggest weekly gain since February of 2024. In fact, if you see on that right side, you can see how Korean stocks last week hit the highest since March 2024 when it comes to foreign inflows into that economy, into that market. Despite that shortened trading week that I mentioned, there's a lot of optimism about the presidential election. Of course, having brought a new president in after 6 months of a leadership vacuum in that country. So global funds have added a net $1.8 billion in the equity market to mark the second straight week of inflows, that according to Bloomberg data. And of course, we're watching the Korean won as well because it rose to the highest level since October against the U.S. dollar. There's been a lot of optimism about broader Korean markets. In fact, we have seen not only institutional investors upping their investments into the stock market, but also small investors trying to shake up the country's corporate landscape, not only by buying more stocks, but also using social media platforms and dedicated shareholder apps to push for better governance, hoping to give a boost to the country's famously undervalued stocks. Small investors in South Korea are leveraging online platforms to drive big changes in Korea Inc. Young Hee-won is an art instructor by day and a shareholder with a mission by night. He's poured more than half of his investments into SK Inc. and SK Networks and is now using that stake to push for change.
Compared to advanced countries, Korean companies lag in terms of legal and ethical standards. Shareholders are more advanced in awareness, but company owners, the so-called real powers, haven't caught up yet.
One is just one of South Korea's so-called ant investors that are using apps such as Act, Naver, and KakaoTalk to band together and push for corporate reforms.
ACT is a platform for minority shareholders. Through My Data authentication, shareholders verify their identity and can use electronic proxy voting at general meetings. ACT currently has 110,000 users, which is more than double the figure from last year.
Minority shareholders are now starting to deliver change. Medical company Oscotex scrapped plans to reappoint its founder as CEO, while other firms replaced auditors as smallholders pushed for better governance. Shareholders filed 168 proposals in the most recent round of annual general meetings, a jump of more than 80% from 2021. And foreign activist funds are also zeroing in on South Korea.
There does seem to be that dynamic for change across the board, so we're hopeful that that will play through to better performance, better governance, and critically better returns at some of these companies that are listed on the stock market there.
Newly elected President Lee Jae-myung has promised bold reforms, vowing to strengthen minority shareholder rights and push the KOSPI to 5,000, double the current level. Global investors will be watching to see whether the new administration can turn the long-standing Korea discount into a Korea premium. Yeah, we'll be watching the Korea Open in about 8 minutes, but we do have breaking news out of Japan right now. First quarter GDP revised numbers coming in at a contraction of 0.2% annualized for the first quarter. This is a much smaller contraction than was expected. We had seen a stronger reading when it comes to private capex, so this probably helped the final GDP numbers for a contraction of only 0.2% for the first quarter. On a nominal basis is actually growth of 0.3%. The deflator year-on-year growth of 3.3%. Private consumption quarter-on-quarter also gaining 0.1%, a slight expansion than actually ending up flat as was initially expected from the preview data that we got, preliminary data that we got before. We still see some setback in the Japanese economy. Of course, we do have the bounce in imports from that slump that we saw in the fourth quarter, but that GDP report really will be top of mind for the Bank of Japan as well. They have had the view that they need to remain vigilant against risks to the economy. So yes, a contraction for the first quarter, but the final number seeing a smaller contraction. We're also getting the Japan April current account surplus data, 2.258 trillion yen. The trade deficit also coming in at a much smaller than expected, 32.8 billion yen. So we continue to see a little bit better numbers, Haidi, than was initially expected. But still, of course, we continue to watch the broader economy here in Japan because we have seen the bond markets, a lot of volatility on that space, given expectations of more debt issuance in this country.
Yeah, looking at the BOJ scheduled bond purchase operations, the Ministry of Finance sort of creating some tweaks to increase sales of short-term bonds relative to those at the long end, right? That should have the effect of pushing the two-year yields higher and helping potentially price in what the BOJ does next. But take a look at some of the stocks that we're watching when trade opens in Korea and Japan shortly. Of course, it is a public holiday here in Australia, but we're watching any of these AI and chip-related names. Bloomberg scoop that Meta is said to be talks to make a multi-billion-dollar investment into artificial intelligence startup Scale AI. Sources telling us that the financing could exceed $10 billion, which would make it one of the largest private company funding events of all time. Take a look at US futures as well. As we see, we did see futures kind of edging a little bit higher. We had the more robust than expected US jobs numbers on Friday that triggered the sell-off in the bond space in that session. And of course, we're also watching, perhaps with particular interest, at a 30-year government bond auction, with Treasuries expected to sell 22 billion of those, really being seen as a key test of market sentiment amidst this broader investor pushback against long-term government debt. Market opens in Seoul and Tokyo are next.
This is the Asia Trade. We're counting down to Asia's major market opens. As we continue to watch the trade negotiations, of course, we are seeing Washington and Beijing talking in London this week, Haidi, and we are expecting big trade data out of China today as well, inflation numbers as well. But when it comes to President Trump really facing not only geopolitical pressures, but also domestic pressure with escalating protests in Los Angeles because of the immigration raids.
And of course, this ongoing feud with Elon Musk doesn't show any signs of abating either, right? There's a lot going on when it comes to the White House at the moment. But Shery, we're also watching that pushback from investors when it comes to longer dated treasuries and the impact on the JGB market as well.
Yeah, that's really had an impact overall globally, as well as we continue to see long end yields across the world, not only in Japan, but also Australia, South Korea, for example, continuing to rise. There are really concerns about the fiscal policy of all these governments worldwide. But take a look at the Japanese yen right now, holding at very close to that 145 level, actually falling against the US dollar last week to the lowest in more than a week. We're seeing a little bit of strengthening in this session, as the Nikkei is also gaining early in the session, up 0.7%. 1%. We'll be watching those semiconductor stocks across Asia today because Bloomberg has learned that Meta will be making a multi-billion-dollar investment in artificial intelligence startup Scale AI. But JGB's right now, the 10-year yield at that 147 level. Of course, we continue to watch auctions of not only treasuries but also JGB markets and a review of bond issuance by the finance ministry as well. Take a look at how the Kospi and the Kosdaq are coming online. We saw a huge rally last week because of the presidential elections. Finally, after 6 months of a leadership vacuum in South Korea, Lee Jae-myung has taken the presidency. We saw the Kospi gain more than 4% just last week. The Korean won also trading at the highest levels since October, Haidi.
Take a look at how we're trading at the moment when it comes to treasuries. We did see a bit of a tick up when it comes to futures trading. Some of the US jobs data that we had on Friday sort of alleviated these recession concerns, and we saw that sell-off in the longer end in particular. But take a look at what we're watching at the moment. We will be watching very closely this 30-year Treasury auction, $22 billion set to be auctioned off by Treasury this week on Thursday. That'll be really a key test of sentiment, particularly when it comes to looking at signs of demand. The auction tail, foreign participation will be in the spotlight as well. So very, very keenly watched when it comes to where we go next with the situation for longer dated bonds globally. Let's bring in Lombard Odier, senior macro strategist, Homin. Homin, great to have you with us. So there's a lot of cross currents happening at the moment. There's obviously concerns over the US fiscal situation. There's concerns over the outcome of US-China negotiations as well. How do you sort of, I guess, advise around this or invest around all of the uncertainties?
Well, the main recommendation we're making to investors right now is to keep the portfolio tilt toward risk because the latest developments clearly suggest that we're still in the middle of the deal-making phase in the Trumpian trade policy, and that certainly is helpful to the risky assets because it potentially reduces the anxieties that's still in the price for equity assets, for instance. And, there is a scope for potential new positive catalysts in the form of bilateral deals before the July 9th deadline for the reciprocal tariff that was announced in early April. So we think that's the key mover for the markets, and the markets have rebounded, of course. But if these new catalysts arrive, certainly the risky assets could benefit. So what we're doing right now in the portfolio is to keep the tilt toward risk. Of course, the higher bond yields are still a bit of concern for the market participants. But from our perspective, there's a technical element to this, and as long as the inflation numbers calm down eventually and the central banks can look through this, we think ultimately that the bonds will benefit from increasing demand because of their cheap valuation. So overall, we think the constructive market environment to continue.
Do you expect it to continue when it comes to that constructiveness with trade talks ongoing? We were sort of having a conversation with one of our MLive team members earlier, and his view was that as long as things don't regress, then markets are going to keep sort of chugging along as they do now. Do we expect meaningful progress in these talks?
Well, we would say that we would argue that there is a greater chance to basically maintain the status quo here when it comes to U.S.-China trade relations and the bilateral relations of the other countries with the U.S., given the keenness for talks that have been expressed by Trump. Now, what was quite intriguing about the development last week with the call happening between Trump and Xi is that perhaps China has a pretty significant leverage in the negotiation with the U.S. due to its dominance in the production of refined rare earth, which is beginning to be an issue for the auto sector because, as you know, China has tightened the controls on rare earth pretty significantly since April. And the court rulings on Trump's tariff certainly creates an interesting incentive for the other U.S. trading partners to potentially preempt sector-specific tariffs by agreeing to a deal now And on the U.S. side, for sure, there is a bit of a rising discontent with the tariff policies. So it makes sense for Trump team to pursue these deals before the new eventualities arrive in the form of court rulings. So if you combine these different elements together, we think there's a scope for additional deals that keep the market environment calm. So we agree that there's a chance for the markets to simply chug along, and this is basically the scenario they were positioning for in next few weeks.
Yeah. Does that mean that you're a little bit more optimistic about the Chinese market and just broader assets in that economy?
So certainly the Geneva deal and the recent favorable development in terms of the U.S.-China trade talks create a bit of upside risk for Chinese economy, and certainly will be a helpful factor for the market sentiment surrounding China. But our current concern right now is that the trade talks could actually motivate China to be more cautious in its use of monetary policy, which we still think is a pretty important factor for the market. If you think about the macro data in China recently, property sector is just stable enough. It's not booming. Inflation remains very, very low, close to 0% for almost 18 months now. And despite all this, the People's Bank of China is not really being aggressive about interest rate cuts and liquidity injections, and certainly the guidance for the renminbi, which remains fairly stable against the U.S. dollar. And this is product of the fact that Beijing is prioritizing talks with the trading partners and truce on the currency front over the reflationary needs for the economy. And we think this type of stance will continue as far as trade talks go on. So our view here is that there is a bit of upside for the economy for sure due to these trade deals. Exports not going to help still this year, and monetary policy will continue to be pretty cautious. So that motivates our relatively balanced outlook on China. China will be stable enough to help other economies, but it's not going to be strong enough to be a game-changing factor itself. And we maintain that stance on Chinese economy and the financial markets.
Okay. So you're a bit more cautious about China overall. What about Japan? Because we are expecting trade negotiations between President Trump and Prime Minister Ishiba on the sidelines of the G7 as well. You've say in your notes, so you've turned neutral on the Japanese yen. Why?
So first of all, the trade talks, we simply expect a bit of a UK-style deal with the US. We know that the Ishiba cabinet has been pretty tough in these negotiations, but we think of it as a negotiating tactic. And now, after the Nippon Steel deal, there seems to be a bit of activity in the bilateral talks, and that suggests maybe a deal happening before July 9th deadline. And that will be positive for the economy, we think. And we think Japan has strategic position in U.S. strategy to achieve that outcome. Now, as far as the yen outlook is concerned, we think the Bank of Japan will be careful not to send a major hawkish signal at this juncture after the bond market turmoil, especially for the long end of the yield curve. And in the absence of a clear deal with the U.S., which still has significant implications for the auto sector in Japan, so that certainly leads to a slightly cautious outlook for Bank of Japan in next few months. We acknowledge that the rate hike call is a close call between, say, first quarter of 2026 and the fourth quarter of this year. But given the need to, observe more data and wait for the deal to materialize on trade front, we think it makes sense for the Bank of Japan to guide for continued hold, and that should keep the lead on the strength of the yen in the near term, maybe 3 to 6 months.
Yeah, we'll be watching that BOJ policy decision in a couple of weeks. Homin Lee, good to have you with us, senior macro strategist at Lombard Odier, as we keep an eye on the Korean markets, the Japanese markets as well, especially for those AI-related stocks. Bloomberg has learned that Meta is in talks to make a multi-billion-dollar investment into AI startup Scale AI. The funding could exceed $10 billion in value, and it would be Meta's biggest ever external AI investment. You can see SK Hynix leading the gains right there. Gains for 4 consecutive days. We're talking about the highest levels since July of last year, Haidi.
Shery, of course, we're watching very closely the situation in Los Angeles as immigration clashes escalate. We've seen Governor Newsom seeking for the National Guard to be pulled out. The critics, of course, of the deployment of the National Guard on Sunday really overriding the objections of California leaders and other local officials to restore order and continue the sweeping deportation operations. At the moment, we are hearing from the LA Mayor, Karen Bass, there speaking, as well as hearing from the LAPD. Karen Bass saying that federal forces were deployed to protect federal property. She says that she's spoken to Trump's chief of staff as well as the U.S. attorney and calling for peaceful demonstrations in this press conference at the moment, saying that the deployment of federalized troops causes chaos. We also heard from the Los Angeles Police Department saying unlawful assembly has been declared for the Civic Center area of downtown LA. Mayor Bass saying that she'll meet with the LAPD chief shortly, as this is sort of an ongoing situation, of course. But the demonstrations that we've seen over U.S. immigration raids really escalated across the Los Angeles area. We've seen thousands of protesters clashing with security forces, tear gas filling the air outside that federal detention center in downtown LA before the ordering of the National Guard. And we've also seen the threat from President Trump that not just National Guard troops will be there, but also potentially the deployment of U.S. Marines as well. More ahead on the Asia trade. This is Bloomberg.
Demonstrations over U.S. immigration policies continue to escalate in the Los Angeles area, with thousands of protesters clashing with security forces and tear gas filling the air outside a downtown federal detention center. For more, let's bring in Bloomberg's national immigration reporter, Alicia Caldwell, who joins us now from Los Angeles. And Alicia, we just heard from the L.A. mayor really urging calm to protesters. What do we know at this point?
Well, the protests expanded this afternoon, and protesters effectively were pushed away from the federal building by Los Angeles police officers. There's a big divide between what the feds are doing and what local authorities are doing. So the federal agents, the federal presence, including National Guard troops, are protecting or standing guard at the federal buildings, and the local police have pushed protesters away from the area. And actually, protesters ended up on a freeway nearby. So that is now being unfolding at the moment. The police are deploying tear gas and other what they call non-lethal or less than lethal armaments, including tear gas and rubber bullets and that sort of thing, to disperse that crowd. It's been declared an unlawful assembly, and police have ordered everybody to get out of the area. The crowd is thinned, but it is certainly not over at this point.
We've seen an average of around 2,000 detentions per day. That's still short of the administration's goal of 3,000 a day. Can you tell us about sort of the broader policy pressure here, and how perhaps the scenes that we're now seeing is proving to be a bit of a diversion for why these protests are happening in the first place?
Exactly. There's intense pressure at Immigration and Customs Enforcement to ramp up those arrests and hit that 3,000 mark. And in fact, last month, there was a very tense meeting with senior White House officials, Stephen Miller, and the Secretary of Homeland Security, Kristi Noem, with senior ICE officials, where they were told point blank, you have to reach this threshold, this minimum. And people are worried for their jobs at this point. There's been quite a shuffle at ICE. And what we're seeing now is an expansion from very targeted, if not aggressive, arrest operations to approaches at Home Depots and things like that in the business district or the fashion district in downtown Los Angeles on Friday. And we've seen this start to elevate rather rapidly, where businesses are being raided and communities are suddenly responding to a significant ICE presence, armored vehicles, heavily armed officers and agents. They've got rifles, helmets, and they look ready to go into difficult situations. And that's expanding an already tense situation.
Yeah, you can actually see right now live pictures out of Los Angeles, and you can see the LAPD, not to mention, of course, the National Guard troops as well that have been deployed by President Trump. But that's been a huge point of contention with the California leadership, right? So, Alicia, what can you tell us about how unprecedented it is right now to actually be deploying soldiers on the ground?
So this has not happened since the 1960s, where a president has federalized National Guard troops and sent them into the state of California did not ask for this. They have asked, in fact, Governor Newsom has asked that the troops be withdrawn. It's not unusual to use National Guard in response to disasters and social unrest and civil unrest. We've seen it before. We saw it in 2020. The unusual part here is the federalization of these state Guard troops going around or without the request even of state authorities, and just directly the President of the United States saying, I'm deploying these troops. As I said, it's not happened since President Lyndon Johnson deployed troops to protect civil rights protesters. So really, we are in uncharted territory here. Certainly, we've not seen this for civil unrest in, again, the last 50 plus years. And as these things step up, the president has said he wants to see troops everywhere. We don't know what that means at this point. But it appears, at least, that from the federal perspective, they are expanding their footprint. They have told members of Congress they'll be here for at least 30 days. This is not going away is the general response, and sort of get used to it. ICE has repeatedly said, think before you respond or resist, and warning people if they object or if they resist in a way that federal law enforcement feels is blocking their opportunity to carry out their duties, they'll be arrested. And certainly any allegations of assault will be prosecuted according to the federal government.
We are looking at live pictures at the moment near the Federal Detention Center in downtown Los Angeles, where, of course, so much of the focus of the escalation of protesters clashing with security forces, the use of tear gas there around and outside that downtown Federal Detention Center. Alicia, I do wonder, when it comes to the legality, critics will say that there's questionable legality, particularly now that President Trump is also threatened to use the likes of, active duty members like the Marines, for example, to get the situation under control. But I also wonder when it comes to the legality of these ICE targets, for example, and the process by which they've gone through to try and arrest and detain people. Are the courts involved in this at all?
They are, heavily. Multiple cases have been filed challenging the approach that ICE is using, challenging Fourth Amendment rights and challenging detention. In many instances, courts have objected to deportation approaches. Generally speaking, if you're in the country without legal permission, you are arrestable and ultimately deportable. But there's a process the United States government is supposed to follow. And advocates for immigrant communities and civil libertarians are saying they are not following those processes. They are not providing due process. And so those challenges are expanding in federal district courts now. And judges are responding. And in some cases, as I said, putting on hold deportation plans. But there's an expansive use of laws that we've not seen used, certainly in this century and in the last, since World War II. In some cases. So we're starting to see a real expansion of the Trump administration's approach to any and all options they feel they can implement. And again, National Guard troops being nationalized and sent, or federalized and sent to Los Angeles is another example of that. It's fairly unprecedented. It's a significant step up. There's real questions about how one would deploy the U.S. Marines and what authority they would have. There are laws that strictly prohibit, for instance, law enforcement from committing or engaging in domestic law enforcement.
Bloomberg's national immigration reporter Alicia Caldwell there. Well, it is a full docket when it comes to what the White House is contending with at the moment. Top trade negotiators from the US and China set for talks in London later on Monday aimed at diffusing tensions over Beijing's rare earth export restrictions. The Trump administration wants to restore the flow of critical minerals, crucial for everything from cell phones and EVs to military systems.
Those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva. And President Trump, being a deal maker, talked with President Xi, and he said, let's take, our senior guys and the people who are the same level as you, let's have them meet somewhere, and let's get these things cleared up, and then we'll clear up what you don't like that we've agreed to release on our side.
Let's bring our Chief North Asia correspondent Stephen Angle with us now. And, rare earths has for decades now been a trump card, if you will, for Beijing. How difficult will it be to get to these compromises now that the conversation is moving beyond just straightforward tariffs to export restrictions?
Yeah, I think these talks are quite critical, obviously. And the fact that He Lifeng, who's leading the Chinese delegation, kind of, we're hearing, has an open ticket in the UK until about June 13th, indicates there's some room for optimism that he's built in, as well as potentially contentious talks that they could last several days. We simply don't know. They're going to happen later today to start. Sitting across the table from Scott Bessent, Howard Lutnick, the Commerce Secretary, as well as Jameson Greer, the U.S. Trade Representative. So again, there's so much at stake for these ties economically, and the fact that the reprieve of the Trump tariffs essentially expire in August. So time is of the essence as well. The U.S. will continue to push, as you just mentioned, China to accelerate freeing up of rare earth exports. China really wants a tariff pause completely, if not removing them completely, before really the talks can be in earnest. The U.S. export controls are a contentious issue. And then maybe secondary to all of it is what Donald Trump talked about last week after his phone call with Xi Jinping. Is there, even with the temperature still fairly high, a possibility of a summit between these two gentlemen in the near future? Because, look, from what I know of the Chinese leadership, Xi Jinping is not going to go meet with Donald Trump unless there is a firm deliverable that is positive to China. So the negotiations have to be begun in earnest. And what we're hearing as well from Chinese state media and other sources is that Xi Jinping really sort of told Donald Trump, rein in your hawks in your cabinet. The hawks perhaps have been gaining ground in the narrative following that truce in Geneva. So again, bring down the temperature is kind of the message from Beijing.
Are we at least seeing the temperature come down when it comes to China-European Union relations, especially when it comes to electric vehicles?
Well, potentially, yes. And keep in mind as well, in the end of July, you're going to have EU leaders visiting Beijing for the China-EU summit. So there have to be some deliverables there as well, in addition to the reported Airbus deal that is potentially in the works. For EVs, the 5 years of gains for Chinese car makers in Europe kind of ground to a slowdown last year because of tariffs, as high as 45% on MG. BYD has 37% tariff, 17% added on to the standard 10% EU tariff. But now we're hearing from the Ministry of Commerce in Beijing that talks with the EU are moving to the final stage. But still, there's still a lot of work to happen to get this minimum price guarantee.
Chief North Asia correspondent Stephen Angle there with the latest on all of these trade negotiations. More ahead here on the Asia Trade. This is Bloomberg.
Keep an eye on Sumitomo Realty today under pressure after Elliott management said in an open letter that the company should enhance its governance. More ahead, this is Bloomberg. Inflation numbers out of China in a few hours are expected to underscore the disinflationary drag that's dampening manufacturing activity as trade momentum also slows. The CPI figure may stoke concerns that policy efforts to boost consumption are not gaining much traction. And the trade report will give a read on how external demand is holding up in the face of U.S. tariffs. With us now is Xiaojia, Chief China Economist at Credit Agricole. Xiaojia, always good to have you with us. How indicative are you expecting these numbers to be of the overall trend in the Chinese economy?
Yeah, I think the May inflation data, unfortunately, will likely continue to show the continued disinflationary pressures in China, with CPI inflation continue to be a negative reading, slightly larger than last month, and the PPI deflation also being widened to over 3%. We are forecasting minus 3.2 compared to last month to minus 2.7. If we look at the overall economy in China, we have to say that while the U.S.-China tariff truce coming out on 12th of May was helpful to insert some of the put to a more decline in terms of the sentiment. But overall, I think the domestic demand in China remain relatively soft, and the business environment and outlook remain relatively cautious as well. So that does not really being very supportive for a strong reflation for China at this moment.
How much of a difference will the trade deal with the United States make when it comes to the fundamentals of the Chinese economy? And are you factoring any of that potential in?
If we look at the trade truce, is really much needed, because if we look at the previously after the Liberation Day tariff imposed by U.S., clearly the U.S. and China tariffs on each other was way too high. So, but now if we look at the tariff levels, it's still at a very relatively high levels, with the average U.S. tariffs on China still around 40%. So if we look at the coming months, I think if we look at some of the high-frequency data, there was definitely a rebound in terms of the bilateral trade between U.S. and China instantly after the 12th of May, the trade truce. But if we look at a longer horizon, I'm not very sure how much longer this could really sustain, because now we are seeing this rebound of the bilateral direct trade between the U.S. and China. On top of that, there have been some front-loading shipment demand in anticipation of further of the tariff restrictions. But beyond that, we will likely to see the payback of those previous front-loading shipment. So in the next couple months, I think China's trade could remain still quite supported by those, but into second half, especially if the global trade volume showing more signs of softening, with the U.S. economy becomes less strong, more of the continuing to slow down, that would not bode particularly well for continued very strong export growth that we have seen for China in the past few months.
Xiaojia, it's quite interesting, the fiscal outlay picture, right? The first 4 months that we've seen from local government spending has been the highest in about a decade. Do you expect that to continue to accelerate? And if that spending's not going towards property, where is it going? And do you think they can invest and spend their way into reviving demand?
Yes, Heidi, that's a very good point. I think if we look at so far this year, there has been some progress in terms of the fiscal situations. The NPC definitely has set a wider fiscal deficit for China compared to previous last couple of years. And if we look at the local debt swap program, was also quite helpful. So far in the first 5 months of this year, China's local debt swap program that has been about 2 trillion in size for setting for so far this year is almost done. And if you look at the local government special bond issuances, that have also been picking up the pace. So while we are going to see likely more evidence of more softening of the Chinese economy into the second second half, then definitely I think the local government as well as the central government bond issuances will continue to pick up its pace and insert the necessary fiscal easing into the Chinese economy. So I think in the near term, we are going to see the local government fiscal spending to pick up its pace, and more importantly, I think the central government is allowing more autonomy for the local governments to put into those fundings into various sectors and to support the economy. If we look at the past months, they're having a lot into the local infrastructure, to transportation. Some of that has been supporting the land sales, the buyback of the land, and also to take care of to tackle with the existing housing inventories. And I think a larger proportion into the coming months will be allocated into the property sector in terms of land and the existing inventories. I think that will help. That said, I think this will be a gradual process rather than very aggressive tackling of this issue, but indeed is very much needed.
How much of a concern is the labour market and labour market conditions in China at the moment? Because we've seen a pretty depressed mood for unemployment, particularly when you take a look at youth unemployment.
Yes, if we look at the overall employment, I think is pretty much at a normal level. If we look at the urban unsurveyed unemployment rate, just about 5%. Not too concerning, but for youth, I think there is a cyclical issue, there is a structural issue. I think for China, what they can really do is while they are doing this fiscal and easing, which is very much needed to support the household income and the labor market conditions. More importantly, I think China will need to also would also need to wrap up the reforms necessary to say open up the service sectors and also roll back some of the previous restrictions to various private sectors and industries to allow more of the laborers flowing into those services sector. That will be quite helpful, because if we look at the labor demand for manufacturing versus services, clearly services will demand more labor compared to manufacturing sector when we valued by the GDP value. So I think to open up services sector and to allow a little bit more deregulation in a number of areas and to provide more support to the private sector will likely to be more effective.
Xiaojia, who's the chief China economist at Credit Agricole. Really great to have you with us. And of course, senior US and Chinese officials are set to meet in London on Monday for talks aimed at diffusing tensions over rare earth minerals. It's a critical input for high-tech manufacturing. Our Bloomberg managing editor for commodities and energy in Asia, Clara Ferrer-Marquez, joins us now for more. And, you know, your average viewer or reader at Bloomberg may not be able to name all of these minerals, but they're critical across critical industries, right, from defense to smartphones and the such. Does that make it more complicated in terms of being able to get a compromise, given that a lot of these areas would fall under national security for both sides?
That's right. I mean, it really raises the stakes as we go into talks again today. Both sides accusing each other in advance of the weekend of reneging on the Geneva agreements. And I think we've seen over the weekend a bit of a conciliatory move from China, saying that it has approved some licenses without giving any details, but at least sort of indicating that it could do that. I think what we won't see in all likelihood is China giving up this crucial lever. Remember, it not only dominates mined rare earths and mined critical minerals, but it really is about the refining and the processing, where they can control both the actual production of refined metal and the technology used to produce it. So any other country is years away from getting there.
How much of that processing capacity does the U.S. have, and how dependent is America on Chinese exports at this point?
Extremely. So the US has minimal capacity, and these are the rare earths, most of them, or at least those that have been restricted by China, are used for very potent magnets. So that's anything that's used in something that turns, so it's used in motors. It's also used very importantly because it's heat resistant, so it'll be used in missiles, it'll be used in night vision goggles, it's even used in medical devices, smartphones. There's a huge variety of industries that rely on these minerals, and they're not particularly economic because you really only need such a small amount, so it will require a lot of state support. And importantly, as we go into this talks, it requires a lot of time for the US to come even close to China's capacity.
Bloomberg Managing Editor for Commodities and Energy, the Asia, Clara Ferreira Marquez. Good to have you with us as we continue to watch the U.S.-China trade negotiations, of course, resuming in London on Monday. And we're seeing pressure on all sides for President Trump at this point. The tensions are escalating in L.A. as we have seen really days of protest over immigration raids. They escalated over the weekend, and now we're seeing thousands of protesters out and about on the streets of Los Angeles right now. We had seen earlier security forces flooding the streets. We know that tear gas is filling the air outside of downtown LA at the moment. You can see many people right there wearing masks at the moment, and also a fire just on that background. And Haidi, of course, all of this to do with really the immigration raids being ramped up in recent weeks. ICE has averaged about 2,000 detentions per day nationwide. We have heard from the Los Angeles mayor already, Karen Bass, really urging peaceful demonstrations in a press conference, and also really urging federalized troops to not cause chaos. We know that President Trump has deployed national troops to LA.
I know that Trump's borders has told media that Mayor Bass should be thanking the president for helping to restore order and warning that leaders could be arrested if they obstruct these enforcement efforts. It really is extraordinary escalation. We've heard from the likes of Gavin Newsom and other Californian leaders saying that this not only doesn't help the situation, it's actually further inflammatory and has worsened the situation, and have requested for these personnel to be pulled out to be able to restore order. We've seen President Trump really, right from the campaigning for his second term, making it very clear that he was going to be more aggressive in the use of the military. He had labelled several big cities back in 2023 as crime dens that he'd previously held back from sending in the military. So it's quite interesting that we've kind of seen, in these times of protest, that this has been escalated and executed in that sense, right? Remember back in 2020, we saw Trump really pushing to send active duty military troops to quell racial protests there, and we have also heard remarks suggesting that he's considering sending in active duty members like the Marines, which would of course be a further escalation. Shery, you mentioned that 2,000 a day arrest number. What's interesting is that that's not even close to the 3,000 a day target that's been given to ICE officers, so hence that sort of extreme pressure that we've seen on immigration officials to be able to execute what the White House wants.
And that showdown continues with California leaders as well, right? I mean, I mentioned the Los Angeles Mayor Karen Bass talking about deploying federalized troops causing chaos, but we also heard from Governor Gavin Newsom condemning the move also as an overreach by President Trump. And we know that the president has repeatedly threatened to cut off federal funding to these cities and states to limit cooperation with federal immigration authorities. So this is not an issue that will go away very soon. You said, and Haidi, of course, really short of the daily arrests that the president wants to make around immigration at this point. We'll continue to monitor the developments in LA, as you can see right there, blazing fire and smoke on the streets of Los Angeles. This is Bloomberg.
Take a look at treasuries at the moment, and of course what we're watching is really a key 30-year auction this week, this Thursday in fact, as a key test of sentiment, particularly when it comes to how foreign participation plays out. We did see some respite and that sell-off really coming into play after the Friday jobs numbers came in a little bit more robust than expected, pushing back some of these US recession fears. Let's bring in our senior reporter Ruth Carson. And Ruth, how close are you watching this auction?
Very closely. Another week, another big long bond auction, another potential stress point for global bond markets. We obviously saw tepid demand for Japan's 30-year bonds at auction last week, and that was just a day after, South Korea, Australia faced pressures as well. So this is the world's biggest bond market, the most critical bond market in the world that focus is very much on traders' radars on. And so as the 30-year comes out on Thursday, definitely watch this space. We know that yields for the 30-year part of the US curve touched near a 20-year high last month. So depending on the appetite, we could see further pressure, and that means, higher borrowing costs at a time when the US can least afford it.
We're seeing a whole different picture when it comes to emerging markets. Bond sales surging there. We're seeing more optimism and sort of capital veering away from America at this point.
Yeah, absolutely. And it's a great observation because at the same time where we're seeing a lot of pressure points in, the world's most developed markets where you think that debt is the safest, you've got the opposite happening. Investors are sort of gobbling up all these riskier emerging market debt. But what's happening is essentially that there's more than $300 billion of sales since the start of this year, as particularly investment grade emerging markets are looking to lock in borrowings. Spreads, for example, emerging market bond spreads to the US are at some of the tightest levels in half a decade, and they're all looking to lock in borrowings before things could potentially worsen in the second half of the year. And there's no short of risks to markets. As we all know, we've got a trade war, we've got inflation risks out there. And hey, if there's demand, definitely lock that in right now before things could certainly change on a dime.
Ruth, what are you watching for when it comes to JGBs?
Look, auctions are definitely the big thing, and I know that we had a big risk out of the way now with the 30-year auction last week. But look, definitely look at the yen, look at what's happening with the 30-year auction with treasuries, because they definitely do sort of influence each other depending on the day and depending on the risk. So definitely traders I'm speaking to, strategists, fund managers are still looking at long end JGB and the performance as a barometer for global bond markets, particularly in the Asian time zone.
Our Bloomberg senior reporter Ruth Carson there. More ahead on the Asia trade. This is Bloomberg.
Korean equity markets are rallying right now, gaining ground and extending those gains from the previous week on optimism about a new president and perhaps more corporate governance reforms in the country. Even small investors are trying to shake up the country's corporate landscape using social media platforms and dedicated shareholder apps. They're pushing for better governance, hoping to give a boost to the country's famously undervalued stocks. Take a listen.
Small investors in South Korea are leveraging online platforms to drive big changes in Korea Inc. Young Hee-won is an art instructor by day and a shareholder with a mission by night. He's poured more than half of his investments into SK Inc. and SK Networks and is now using that stake to push for change.
Compared to advanced countries, Korean companies lag in terms of legal and ethical standards. Shareholders are more advanced in awareness, but company owners, the so-called real powers, haven't caught up yet.
One is just one of South Korea's so-called ant investors that are using apps such as Act, Naver, and KakaoTalk to band together and push for corporate reforms.
Act is a platform for minority shareholders. Through My Data authentication, shareholders verify their identity and can use electronic proxy voting at general meetings. ACT currently has 110,000 users, which is more than double the figure from last year.
Minority shareholders are now starting to deliver change. Medical company Oscotec scrapped plans to reappoint its founder as CEO, while other firms replaced auditors as smallholders pushed for better governance. Shareholders filed 168 proposals in the most recent round of annual general meetings, a jump of more than 80% from 2021. And foreign activist funds are also zeroing in on South Korea.
There does seem to be that dynamic for change across the board, so we're hopeful that that will play through to better performance, better governance, and critically better returns at some of these companies that are listed on the stock market there.
Newly elected President Lee Jae-myung has promised bold reforms, vowing to strengthen minority shareholder rights and push the Kospi to 5,000, double the current level.
Global investors will be watching to see whether the new administration can turn the long-standing Korea discount into a Korea premium.
Of course, we are very keenly watching the ongoing developments in downtown Los Angeles as we've seen the National Guard troops being sent in on Sunday to try and quell these ongoing protests. We've seen thousands of protesters clashing with them, security officials, with police, really over the escalation of these sweeping immigration raids. We've seen around 2,000 daily arrests by ICE, and that is not even anywhere close to the at least 3,000 target that the Trump administration has said that it wants to see. You can see tear gas, you can see burning cars happening there, all very close to that downtown federal detention sector that has really been kind of the hotbed of that protest action. And Shery, we've seen the National Guard being sent in. President Trump also suggesting that if things escalate, he could send in active duty officers from the Marines as well. We've seen Californian officials, including Governor Newsom, including Mayor Bass, really calling for calm. And some of these officials saying that the deployment of the National Guard is not helping the situation, but actually inflaming things.
These are really extraordinary pictures, aren't they? I mean, it's not often that we see such scaled protests across the United States. And you can see the pile of smoke just engulfing that whole area of downtown Los Angeles. And could we see more of a clash now ongoing, especially between California leaders and President Trump, as you mentioned? And could the president also threaten again to cut off federal funding to cities and states that limit cooperation with immigration authorities? We'll keep an eye on developments across the U.S. This is